What do you need to know about income-driven repayment plans? First of all, IDR is not a repayment plan. IDR stands for the different kinds of income-based options that you have to pay back your student loans. A lot of times when people tell me that they're on an income-driven repayment plan, that doesn't actually tell me anything. That's kind of like saying that, oh, I have a shape, rather than saying, oh, I have a square, right? So IDR is the broad catch-all category for what the different options are for paying back your loans based on your income. An IDR repayment plan is what you need to have to qualify for most kinds of student loan forgiveness through the federal government. There's plans not through the government that you can use to get student loan forgiveness where you don't have to pay based on your income, but the typical answer is that you do have to pay based on your income with the federal government. So the 4 different kinds of income-driven repayment programs are ICR, Income Contingent Repayment. This has been around since 1994. It's been around for forever. It's a very confusing plan. The math is different for this plan in terms of what you would have to pay, and it usually results in a higher monthly payment than any of the other kinds of the income-driven options. ICR is really only the best option for somebody who has Parent Plus loans, who consolidates their Parent Plus loans to a direct consolidation loan, and this new ICR payment is probably going to be pretty high unless you're truly making not a lot of money. So if you're making $20,000, $30,000 of adjusted gross income and you have a lot of student loan debt as a Parent Plus borrower, then the ICR program can really be pretty helpful. But otherwise, it's one that you should probably avoid. The next program, IBR, is a 15% of your income program, and it's discretionary income, and this is calculated a little bit differently from ICR. They take your AGI and they subtract 150% of the federal poverty line for your family size. So with the IBR program, you're going to be paying 15%, which is still probably too much for your loans, but the IBR program can be very helpful for people in very unique situations that need to file their taxes separately, for example, need to put their loans in a program where it's going to cap the payments instead of something like revised pay-as-you-earn. So we'll get into that in a little bit, but the IBR program has been around since about 2008. The third program I want to talk about is the pay-as-you-earn program. This program is 10% of your discretionary income. It was announced at the University of Iowa in the 2012 presidential campaign. The Obama administration decided to make this available earlier to people, but put limits on who could use it because of that limited executive authority that they were using to get people onto this program. So the pay-as-you-earn program is really something that's been around since 2013 in terms of being able to access it. But the pay-as-you-earn program is a 20-year program that you're paying back your loans for. It's really good for people seeking a pure forgiveness strategy on their loans. The fourth and final kind of IDR program that I wanted to talk about, see how I messed up there? IDR is income-driven repayment. That's the broad category of these programs. IBR is an actual specific repayment program. So the fourth kind of IDR repayment option that I want to tell you about is revised pay-as-you-earn. Repayee is what it's also commonly called. Repayee is something that's available to anyone with direct loans, and you pay 10% of your income, and your loans can be forgiven in 25 years if you don't pay the full thing off. The revised pay-as-you-earn program comes with interest subsidies that cover a portion of your interest. It covers half of all your unpaid interest every month. So that's pretty cool. Really great option for people that plan to eventually refinance but are not quite there yet. Those are the 4 kinds of income-driven repayment programs. Hope you learned something, and if you have questions, reach out to help@studentloanplanner.com.